Winston and Felix here, and Winston just said to me, Felix, you need to talk about the banking crisis because no one's talking about it. Mainstream media is ignoring it, and it really, really matters. So let's do that. Let's really walk through this. Let's chew through the numbers so you are the best informed investor out there and you know what's actually going to happen here. Okay, go back a year. Silicon Valley Bank fails, and a bunch of other banks fail. And then everybody sort of said, it's over now. It's fine. Don't worry about it. JP Morgan came out and said, don't worry about a thing. And I kept saying, this isn't over. This is not over. They've just plastered over it, but nothing has actually changed. And yeah, it's been pretty quiet for a year on the banking front. And why? Because the Fed came up with something called the Bank Term Funding Program, which was a make-believe program where they basically bailed out the banks. And this is how it worked. They said, we know you are underwater. Your bonds that you hold aren't worth anything, and I'll explain them a lot more in a second, but we're going to pretend that they're worth the original amount and we'll lend you against that original amount. So it was sort of like hogwash, really. But if we look at the first bank failure we just had, the Pennsylvania Republic First Bank, that happened. Why? What about the bailout? The bailout expired. It expired in March, and this is the first casualty since. And the problem with this particular bank is First Republic is exactly the same as what happened to Silicon Valley Bank. They took your money, your depositor money, and they invested in government bonds. You might think that sounds responsible. But those government bonds lost 30 to 50% of their value. Why? Because interest rates went up. When interest rates go up, bond prices come down. It's just an inverse relationship between the two. And the Silicon Valley Bank thing really was just the tip of the iceberg. There is a massive amount of unrealized losses in the banks, about $600 billion. And that's why the Fed wanted to sort of say, no, it isn't there. We really think it's all going to be fine. So that's why the Fed did the bailout. But really what they did is they just made up asset values, right? So they just said, I know the market would pay you 50 cents for that bond, but we're going to pay you $1. So they just inflated asset prices, which is kind of ironic given what Trump's on trial for in New York, right? Inflating asset prices. It's the same thing, but it's legal if you're the government. I'm not saying, well, actually, I am saying that lawsuit is idiotic. I don't have a strong opinion on either way on Trump, but that lawsuit is idiotic. Now that this bailout program, the BTFP, is actually expired, and we no longer have this make-believe program that everything is worth what it originally was, what's actually going to happen here? Well, Winston just explained to me that, Felix, don't panic. This isn't 2008. This isn't this massive housing collapse. But look at commercial real estate. And I put out a tweet today where I quoted the CEO of Starwood Capital, the real estate hotel guys. And he said, there's a CEO, he said that the commercial real estate market in the US is worth $3 trillion. And wait for it. $3 trillion, the total market. He says 1.2 trillion of that is losses. And nobody knows where they sit. So the market's actually only worth 1.8 trillion, but it's priced at 3 trillion. So there's a monster tsunami of commercial real estate losses coming. Who's going to bear the losses? You, me, Winston? No. Banks. The banks who lend against the 3 trillion, now it's only worth 1.8, they're going to absorb the 1.2 trillion, which is double the losses they have on their bonds. So banks are probably actually under by about $1.8 trillion. That seems to matter a little bit, right? So the Fed says that they're about $1 trillion in losses. So, we're not going to argue about 800 billion here. But the Fed itself has run the worst bank in the world, the Fed. The Fed has 50 billion in assets, and it has almost $1 trillion. That's 1,000 billion in losses. And you kind of think, how's that even possible? How can you have 20 times the losses of your capital? Well, it's the Fed, it's the government. And then you think, well, the largest, most important central bank in the world is basically massively insolvent, right? It's a total Ponzi scheme. And does it make the headlines? Does anyone talk about this? Nope. Why does nobody want to talk about it? Because scary as heck. Maybe that's why. But I mean, you talk to people about this, you know what they say? Oh, it doesn't matter. And that's never really a good explanation, is it? It just means, yeah, we don't have a solution. It's uncomfortable. Let's just say it doesn't matter and move on and have another sherry. So if you look at the Ponzi scheme here, the banks have losses of about 600 billion at the very least. The Fed is under by about 900 billion or trillion. And the US government, who should bail out the Fed if it went under, is in the minus for 50 trillion. So what exactly are we relying on here? And what is actually holding the dollar up? Well, it's debt. Debt on debt on debt, losses on losses on losses, and it's the most irresponsible, absurd banana republic that I've ever seen. So what does that mean? Well, everyone's going to say to you, this doesn't matter. And it's fine. Don't worry about it. Look at Japan. Yeah, basket case over there too. And look at the yen, right? The yen's losing value and value and losing value and value and has done so for the last 20, 30 years. And that's the risk for the dollar. And I'm not somebody who's saying, look, the dollar is going to disappear. There isn't a single currency that can replace the dollar at the moment. But the importance of the dollar is going to decline. Because what sensible investor, what sensible international central bank is going to put lots of its money into the dollar when the dollar is run by an insolvent central bank who hasn't yet bailing out the entire banking sector, and the whole thing is underwritten by an insolvent central government, federal government. So this isn't going to happen overnight. So it isn't like, the BRICS countries and all that are going to take over. No, this isn't going to happen. But it's just going to splinter more. And more transactions are going to happen in smaller currencies, smaller cryptos. And the trend of the dollar is just one of slow, gradual, long-term decline. And not by tomorrow, not in 5 years, but if you already look at the last 25 years, the dollar has lost a lot of importance, and it's going to lose a heck of a lot more importance. So what does that mean to you and me? Well, we should probably think about having some assets outside of dollars, because it isn't going to be a beautiful place to be in like 30 years, right? Winston's clearly very, very concerned about that. So how do you do that? Well, I'm actually going to have a podcast with a chap who's the absolute expert on jurisdictions and second passports and all of that good stuff, which I'm a huge fan of. And I think it's worth exploring that more and creating a plan B, and maybe then a plan C, maybe then a plan D. And I'm a big fan of that. And I think if you looked at the last few years where we had COVID and all the madness around that, and then people say to you, oh, these things don't matter, this is never going to happen. Well, some pretty crazy stuff happened during that time period that we didn't really think was going to happen. So I think planning for the worst case scenario and having some alternative options could be a really, really smart thing to do. And I will share that with you. All I ask is that you hit the subscribe button if you want to get a notification for that. And Winston, any final thoughts and concerns? He says, focus on making more money. That pretty much is the solution to everything, isn't it, Winston? Yes. You can buy more cucumbers that way. We thank you for watching. We thank you for tuning in, and hope to see you on the next one. Here is a stock that's called Hermes. And when you say it, you must snarl slightly and, pretend you're French. A lot of French bashing in this video today, right? We have to take the piss out of somebody else here. The Germans, perhaps. I'm one of those. The French don't like the Germans anyway, so I can't really lose here. It's a win-win, really.